5 on your money. Uncertain financial times, feeling even more uncertain due to the interest rates still on the rise and the collapse of two high-profile banks. And these aren't always the easiest topics to understand, so joining us now to help us all break it down is Bankrate.com U.S. economy reporter Sarah Foster. Good morning, Sarah. Thank you so much for joining us again.
Good morning. Thanks for having me back.
Well, we spoke with you 3 weeks ago about these rising interest rates. They keep going up. Are you surprised that the Federal Reserve decided to raise the benchmark rate again by another 0.25% this past week?
Well, you can certainly say that the Fed has been facing probably one of the biggest headaches of its inflation fight. But as we saw just a few weeks ago with the inflation report for February, prices are still elevated, and the Fed understands here that its main objective is maintaining price stability. So what I've been telling people and what economists that I've been talking to have been saying is that this decision to raise interest rates by that smaller quarter point amount, that's a little bit about meeting both of these concerns in the middle. On the one hand, you don't want to cause too much more pain for banks, but you also want to make sure that prices come back down to a much more sustainable level.
Okay, so that was the safe bet, I guess. Since we spoke a few weeks ago, we've seen two major banks collapse and the ripple effects on countless other banks. What do you make of what's happened?
Well, the bottom line here that I like to tell consumers is that you shouldn't be panicking if you put your money in a bank that is part of the FDIC and that your cash falls within the threshold. But there are some concerns here that what is happening at specifically these mid-sized community banks, that they could weigh on the economy just a little bit, not just because of these two bank failures, but because these regional sized banks, they want to make sure that they maintain enough cash on hand to cover all of their depositors' needs. And so we know that these mid-sized banks, they really make up a large percentage of loans going to commercial real estate, even business lending, even for consumer lending. And if they tighten those lending standards, you could see just a little bit of a weight here on the economy.
Well, to follow up on that, a poll by the Associated Press this past week shows that only 10% of Americans have a great deal of confidence in the nation's banks and financial institutions right now. More than half think the government is not doing enough to regulate banks and financial institutions. What do you think needs to be done to restore trust in the industry at this point?
Well, what we do know here is that trust in the banking system, that is the bedrock for it. We can't have confidence in banks and we need to have confidence in banks and also a strong economy. And so I think what you're likely going to hear discussions about over the next few weeks might come from legislators here. We've already seen some representatives bring up the idea of backstopping all deposits with FDIC insurance. Of course, Treasury Secretary Janet Yellen kind of walked back that a few days ago in an address to Congress. But I think what you're going to see here is that these banking regulators, they want to make sure that all depositors know that their cash is safe. And so this is going to be a major area of emphasis for them going forward.
Well, Sarah Foster with Bankrate.com, thank you again for your insights on all of these issues.
Great to be back.
Have a great weekend.